What's up, everyone? It's Cody with Money Investing. So thank you so much for joining in. We got inflation data coming out in less than 15 minutes. So we'll break that down. The markets are looking a little bit red here. So the NASDAQ index ETF is down a little bit over 14 basis points. We got the S&P down pretty much flat, just about down 5 basis points. We got the Dow Jones ETF down about 8 basis points as well. With the VIX up a little bit over 1.5%, so we will be breaking that down. Super excited. We're going to do a quick poll as to what you guys think inflation is going to look like. If you guys can hear me and see me without any problems, just let me know in the live chat. Just give me a thumbs up and we should be all set. So hope you guys are doing great. And here it is, inflation coming out. If that's going to represent some buying opportunities, we are going to be buying. But very excited to find out where inflation is going to be for August 2021. Again, so remember, this is going to be for the prior month. Inflation and any other macroeconomic report that we find out is backward looking. We're getting the data for the previous month, in some cases a couple months in the past. So all right, let's see. Zach says, so tired of CPI data. Honestly, it is really interesting. It's important for the markets. I'm actually going to quickly bring up the screenshots here. 1 second. So go to video. All right, inflation. And all right, so this right here is where we were in July 2021. So in June, we actually increased 90 basis points. And you'll notice that 50 basis points was an increase in July. So David, I'm back in the classroom, so it's tough for me to watch these videos. Shout out to you for watching while being in the classroom. That's that's incredible. But this right here, 90 basis point was an increase back in June. 50 basis points back in July 2021. So we are already starting to see that deceleration. Of course, right now we're sitting at just over 5.4%, kind of like the flatlined inflation that we saw year over year from June to July. For the total CPI, we're sitting at 5.4%. And you'll notice that this right here, the core, when excluding food and energy, basically started coming down, right? All items less food and energy is the red line. We started pushing higher. Right now we're sitting, I think, just over 4.3%. That's where we're sitting from highs of 4.5. I think we came down. And this right here is going to be all the individual items. So you'll notice that, all items are sitting at 5.4%. And we got all items as food and energy, 4.3%, coming down from 4.5. So once the inflation report comes out, we are actually going to be looking into this. So this is going to be the actual number, coming in from the last 20 years. We're going to be looking into this and where it sits. Of course, month over month, we saw that flatlined, 5.4, 5.4. And then when you kind of bring up the all items as food and energy, that started to come down from 4.5% to 4.3%, right? So 20 basis point decrease there. This is going to be part of our analysis, and then we're also going to look at this. Of course, this is the actual CPI, which is going to come out at 8:30 a.m. Eastern on September 14th, which is again today, my brother's birthday. So we're going to be looking into this, and then we're going to launch that PDF file, and then look at exactly what stuff increased or decreased month over month substantially. For those individual items, right? Whether it's commodities, whether it's different consumer discretionary items, we're gonna take a look at those. All right, so that's that. And of course, if you take a look at this, so Oracle reported quarterly earnings, $1.03 per share, 6 cents a share above consensus estimates. The business software giant's revenue fell. Oracle was down a little bit over 2.5%. So we can take a quick look on that as well. So Oracle down just over 2.7% now, started to break down to the downside. Breaking below the 50 EMA as well. So if it does continue to sell off, support level for Oracle is going to be at closer to $74. That 200 SMA, that's the level that I'm watching for Oracle. So that's that. Intuit announced that they're buying the digital marketing firm MailChimp for about $12 billion in cash and stock. That follows TurboTax market acquisition that they did off of Credit Karma last year for more than $7 billion. So Intuit is on my watch list. I will be, keeping a close eye on this stock because I do want to establish a position on this very soon. Happy birthday to your brother, David. Thank you so much. I really appreciate that. Coinbase was up a little bit over 1.2% as the cryptocurrency exchange operator shares basically rose after Piper Sandler reiterated an overweight rating on the stock. And you got Southwest, new management coming in. So President Tom Nealon is retiring from the carry effective immediately. And you'll notice CEO Gary Kelly announced he would retire in January. So that's the CEO and the president. And he named longtime Southwest executive Bob Jordan as his successor. So that's that. All right, so August Consumer Price Index is due to be released at 8:30 a.m. Eastern with hotter than reading expected, right? So people are expecting us to rise 40 basis points, but in my opinion, that's still going to be a much lower increase, right? We're starting to see that deceleration when it comes to inflation month over month in August, and it's expected to stay flat, 5.4% year over year. Doesn't say anything about the core, but core, in my opinion, will start to come down even further. We'll see where we are in the future. But inflation data is being closely watched by the Fed, of course, as it considers when to start tightening monetary policy. And the Fed is due to kick off its latest two-day policy meeting next week on Tuesday, right? We got the FOMC meeting very, very soon. So BMO Global Asset Management, Stephen Bell, said on Tuesday that he expected the Fed to confirm plans to start tapering bond purchases at the end of the year. That is the expectation from me as well. They are going to announce something before the end of the year to basically taper. All right, so that's that. Let's just take a quick poll on where you guys see inflation. So right now, remember, we're sitting at 5.4%. Current inflation at 5.4% year over year. Where will inflation be in August? All right, so I'm just gonna put go higher than 5.4 or go lower than 5.4. I can't put three options, otherwise I would have put like flat as well, like just stay flat. So let's just do this. Go higher, stay flat, or go lower. I'm just gonna do that. All right, so current inflation, 5.4%. And where will inflation be in August? Because we're reporting for the prior month. And two options, go higher or stay flat or go lower, right? All right, there we go. Let's see what you guys think. All right, so the markets, pretty much Nasdaq is down a little bit more, just about 16 basis points at the moment. And we got the S&P down about 7. We got the Dow Jones down about pretty much 7 as well. 6%. Oh my God, that would be like crazy. Just do me a favor and let me know if you guys can hear this. So I just want to make sure that we're all set. Just let me know if you guys can hear this.
The key for them is the demand indicators, which I think are still healthy. We had a survey out us supply to meet the demand.
Well, smart as always. Great to catch up. Will Power, Baird Senior Research Analyst, looking for 170 on Apple at the close yesterday, 149.55, 36.
Perfect. Good. That's great. Great. All right, so we got about 6 minutes left for the inflation data to come out. The VIX is still up a little bit over 1.5. Yesterday we were trading as 1998, so almost testing 20 levels, but then ended up coming down as the markets kind of recovered a little bit, not by a whole lot. So if you take a look at the S&P, mostly the Nasdaq first, it dropped all the way down to lows of about 374. This is the QQQ index ETF, and then we started pushing higher towards the end. And the SPY also somewhat recovered a little bit. So we came all the way down to lows of 444 before the buyer stepped in, pushed up over 68 basis points right now. A lot of stocks actually had this very similar pattern. Like look at Shopify, just a complete sell-off in the first hour, and then the buyer stepped in. Tesla was like the biggest example of how I had no idea how it recovered. I was like already in bed and I woke up shocked that it ended up closing green. That was incredible. At one point it was down, I think a little bit over 2%, 2.5%, 3% it was down at one point. And it recovered all of that. So, it jumped over 5%. So that just goes to show there's a lot of buying power on the sidelines. Same thing happened with Square. Square was like all the way down to our support at 237. If you take a look at the daily chart for this, just a really long wick, right? Just a really long wick for Square, and it really rallied over 4% for this company as well. Take a look at AMD. AMD got bought up from the bottom. It was down a little bit over 2% as well, and then the buyers stepped in to push us over 2% back over 104, 105. So strong momentum here for the markets. It just seems like there is lots of buying power on the side, just waiting to be deployed. But yeah, Palantir absolutely tanked at the open. Yeah, Palantir was selling off at the open when we were watching that live stream, right? And it got bought up again, but still down over 1.7%. But this right here was the entire sell-off of over 5% before kind of recovering back over almost 4%. And just hovering around that 25, 60, 26 dollar level. I missed Tesla yesterday, busy work. Yeah, I mean, Tesla, had like a higher high and higher low pattern, so we're still kind of inside this ascending support level, validating like almost 700 and the moving averages. So we'll see. I mean, a lot of the fate for these companies is going to be determined by where inflation is today, and I'm super excited to really find out. August is here. Q4 is when I really expect year-over-year comparables to get a lot difficult for inflation, because if you compare this over here, right? So right now, what's going to happen is August 2021. We're going to compare it with this August right here, right? August 0.4%. But Q4, we're going to get through this somehow. So September, October, November, December. And then going into 2022, once we start comparing with these numbers right here, 0.6, 0.8, 0.6, 0.9%, that's when we're going to see like inflation start to come back down substantially, right? Because year-over-year numbers are not going to be as crazy as this. If they are, then we'll be in a whole different market and a whole different economy. So Steve, yeah, I can go over the news on Walgreens very quickly. As far as I read, I think there was like a sensitivity issue in terms of how much data they got leaked, basically, if you took a test with Walgreens. I don't see like any material impact on the company in terms of financials or like the revenue. This is certainly like a reputational hit for the company that I basically read, but I'm still buying shares of Walgreens. I only see like a short-term problem for the company. I'll continue to kind of analyze this as it moves forward. But again, just my main thesis for the company is that it's undervalued, and I'm holding on to it for the yield, and we'll continue to buy more at 46, 300 SMA. If it comes down to like $39, I mean, that would be like my cue to like really start buying more, just considering that there's no like actual fundamental basis as to why we're seeing that drop. If it continues to come down, I'll continue to buy it. All right, so we got about less than 2 minutes, about 1:30 left for us to really see what that inflation data is going to look like. And I'll just bring up Bloomberg here very soon, and we'll go over that report together. We'll go over that about 15-20 minutes, till 9 a.m. We'll break that down, and then we'll start doing some individual stock analysis. So I will definitely go over Netflix, I'll go over Tesla, Amazon, all the stocks that you guys are talking about over on the live stream. I will go over that after inflation. Yeah, we'll go over charge point as well right after inflation comes out. So I think that's the first thing that's super important. Then we'll break it down together. But right now, the most important thing is the broader markets, and for us to see where we're trading. I'm actually going to put Apple over here. I mean, Dow Jones really doesn't. Actually, you know what? I'm going to put the yields. I'm going to put the yield, the 10-year yield. Right there. So 10-year yield is already up a little bit over 1.2%. So we got the yield all the way to the left. We got the S&P 500 ETF in the middle, and we got the NASDAQ ETF on the right. And then, yes, again, we'll break down NVIDIA as well, Apple, Airbnb, all those stocks that you guys are talking about. We'll break them down after inflation. All right. Hopefully Bloomberg doesn't crash on me like it has in the past, and we're able to successfully hear what inflation is. All right.
From New York City for our audience worldwide on TV and radio, an inflation report in America just moments away. Going into that, futures unchanged on the S&P, down around about 3 points, negative almost 0.1%. Yields higher by a basis point or two. There's your data. Here's Mike McKee.
Well, it's interesting, John, the transitory argument coming through here as the CPI comes in lower than anticipated. The CPI rising 0.3% on the month. That's the headline. And the year-over-year rate falls to 5.3% from 5.4%. The core, which will get more attention on Wall Street, up just 0.1% during the month. And that is compared with 0.3% last month and a forecast of 0.3%. And so the core year-over-year rate drops to 4% from 4.3%. So off the top here, it looks like we may have a bit of the Fed's story being ratified. Let's take a quick look at some of the numbers here. Food prices up 0.4%, and that's been an issue. Now, a lot of people have been looking at other food at home, and it looks like that was up by 0.6, not a big jump. It was up 0.8 the prior month. And so that falls off a little bit. The question was, would restaurants be raising prices because they had to pay more to attract workers? And it doesn't look like that fed through during the month of August. Gasoline up 2.8%. That's something we'll keep an eye on going forward because, of course, course, oil prices rising significantly over the last couple of weeks. Apparel prices, at this point, up 0.4. New cars, 1.2%. And here's a number you haven't seen in a while.
Please.
Used cars, down.
Down.
1.5%. So a lot of the things we were looking at, not a problem.
You dive into it, John. We got to talk about the markets here with equities on a tear. And I looked at the bond market. It's in about 50 pips right now. But tell me about equities, John.
It's a bit of fuel for Team Transitory, Tom, and it's a lift in the equity market. Up 11 on the S&P. We're up 0.25%. NASDAQ futures rallying a little bit as well. A little lift there, up 25, advancing a bit more than 1/10%. Push it through the bond market, Tom. Yields were higher by a basis point or two. Still higher by a basis point. Let's be clear about that on 10s at least. 133.94. Bit of dollar weakness coming through, TK. Euro dollar firmer, 118.33. Euro stronger. That currency pair up by 0.2%.
Brent crude 74.15, breaking through the 74 level. Michael McKee, one final quick observation.
Well, I think the number that everybody's been interested in is what's happening with housing. And the overall number for shelter is up just 0.2%. Owner's equivalent rent up 0.3, same as last month. So the big increases we've seen in home prices across the country not feeding through into CPI yet. Tom, I should mention the Tom Keene Index, distilled spirits at home, up only 0.2.
Thank you for that.
You're doing well.
News you need to know. Michael McKee, really an all-nighter.
What a piece of news here. So, really coming down in terms of inflation. So let's just check that data on our own. We're going to reload this page. So, all right, only 0.3% increase. That's a lot less than what we were really hoping for, right? I mean, we were expecting a transitory story in general, but this is it hasn't been updated yet. So I don't know why they haven't updated this, but we'll check back once again. So we're gonna go over to this one. All right, so this right here number is coming down to 5.3%. This is all item CPI. Last couple of months we've seen it flatten out to 5.4 back and forth in June and July. Now starting to come down to 5.3%. That's a decrease, and that's what we like to see for inflation. Fed's story starting to play out. Again, this is just 1 month's data. Over the last couple of months, we started to kind of plateau, and now we're starting to come back down. We'll see what the next few months look like, what Q4 looks like. But this is just one of those early signs that this inflation is, again, going to be potentially transitory. We'll see what happens in the months to come. Obviously, we want to be very vigilant with inflation and where it sits. And this right here is going to be the core. So all items less food and energy. We were at 4.5%, then we dropped down to 4.3%, and now we're at 4%. That's a huge drop. That's a big drop for core CPI. So, very, very pleased with that number. Let's see if this actually has updated or not. I just want to take a look at the PDF here. So hopefully, all right, not updated yet. So we're just gonna go with the actual reading here. So all right, we got the consumer price index for all urban consumers increased 0.3% in August on a seasonally adjusted basis after rising 0.5% in July. The U.S. Bureau of Labor Statistics reported today. Over the last 12 months, all item CPI increased just 5.3%. So that's the drop that we're seeing. So indexes for gasoline, household furnishing, operations, food, shelter all rose in August, contributed to the monthly all items seasonally adjusted increase. The energy index increased 2%, mainly due to 2.8% increase in gasoline index. The index for all items, that's food and energy, so here's core CPI when you exclude food and energy, rose only 0.1%. That's 10 basis point increase. That's a lot less in August versus expectations, right? So it's smallest increase since February 2021. So in about 7 months or so, we're seeing that smallest increase. And then again, rose 5.3%, 12 months ending in August. So over here, we're actually going to come down to even further numbers. I don't know why that's all yellow, but let's take a quick look at the very top. All right, this is going to be 12-month ended August 2021, so we're going to see used cars, which are going to be right here. So negative, right? So this is the number that I'm talking about, negative 1.5. So from a previous 20 basis point increase, now used car prices coming down, right? As a result, they're only up 31 something percent, 32% year over year. And look at the previous months. It was 10%, 7%, 10%. Those like huge increases in used car prices, and now we're starting to come back down. This is exactly what the Federal Reserve has told us, that this is going to be transitory in nature because these numbers are not sustainable. They are going to start coming back down. When you take a look at transportation services right here, which includes airline tickets, airline services, you'll notice that 2.9%, 1.5%, 1.5 over the last like several months. And then we saw a negative decline, negative 1.1, negative 2.3, and now year over year, we're only up over 4.6%. So that's another contributor to why inflation is starting to come down. Some other things is going to be fuel oil. So this one right here, I'm actually going to delete all of this. There we go. So fuel oil right there. If you take a look at this one, go all the way to the side. So 2.1, 2.9, and then we started coming down 60 basis points and then a negative 2.1% drop over here for fuel oil. So that's also very good. All right, so 1.5 you already broke down. I just want to take a look at the individual items. This PDF is not available yet. See, this is not updated. So we'll just have to check back. Let me just reload this very quickly. So PDF file. Yeah, this is still showing for July. I don't know why that is. I just want for the August numbers. But yeah, we might have to just kind of circle back to this one. But strong report here. Let's take a quick look on the markets. And of course, the Nasdaq is up over 33 basis points pre-market. We got the S&P up over 37. Let's take a look at the Dow. Dow is up over 40 basis points. So all in all, just a strong move to the upside here across the board for the broader markets. Let's take a quick look on Tesla. So Max, that's a great question. Does this really result mean the Fed could taper soon or even think of a rate hike? So rate hike, that's the real question. That was a real question. Always remember, in order to control inflation, what the Fed needs to do from a monetary policy standpoint, they need to freeze liquidity. The less money people have to spend, the less inflation there's going to be, right? It's very logical. If you have less money to spend, you're going to spend less money, and as a result, prices are going to stay stable and inflation is going to come down. So for the Fed, they only have a few tools that they can actually utilize to either have quantitative easing or quantitative tightening, right? Kind of play around with liquidity in the economy. Interest rates is one of those things. If they raise interest rates, what happens to your capital? What happens to access to capital to you? It becomes more expensive, right? So interest rates are a tool for the Fed that they use to control inflation. But if inflation automatically by itself starts coming back down, just by the laws of economics, supply and demand, then they don't need to do anything with interest rates, right? So this is actually good for the markets over the long term because Fed's target is 2%. They want inflation at 2%. If it automatically by itself starts coming down, they don't need to play around with interest rates at all. They can keep them lower for a longer period of time because, again, back in the 70s when we saw inflation was super high, the Fed had to raise interest rates, and I think interest rates back then were like in double digits, really, really high, in order to combat hyperinflation. So if inflation starts coming back down by itself, interest rates, they can postpone it. And again, we'll find out more about the interest rate decision in the FOMC meeting. That's going to happen in next week, so Tuesday, September 22nd. And we're going to find out more about what their summary of economic projections are, right? Where do they see the interest rates and the tapering going in the future? And again, it also depends on the employment report because employment was far lower. So if you take a look at this, you'll know that non-farm payrolls only grew by 235,000 in August, well below expectations of 720,000, right? So figures out this week may show that inflation has cooled off a bit month-on-month terms, but it remains well above the 2% target. It's employment that is holding the Fed back from pulling the trigger on the rate rise. So the only way the interest rates are potentially going to go up is that they want a stronger economy. And the stronger economy is as a result of more and more jobs and more people back in the workforce. Because think about it, right? When interest rates go up, that puts a little bit of an expensive capital, right? Your capital becomes more expensive. People need to be working. The economy needs to be strong in order to kind of weather through that interest rate hike. If the economy is still weak, like think about it as like a somebody who's just fell down, they're now starting to get back up. You want them to get back up before basically pushing them back down again, right? So you want them to get back up. That's what the Fed is allowing for the economy to do. They're having this easy monetary policy before we get back up, and then we're able to weather through the interest rate hike much better, as opposed to like doing it now when the economy is still in that recovery phase. So I hope that makes sense. And again, interest rates, we're gonna find out more about next week, but My expectation has always been that we're not going to see interest rate hikes at least till 2024, if not like much further back, because back when we had the Great Recession, 07, 08, it took over 8 years for the Fed to actually start raising rates, regardless of how much criticism it received. The Fed gave enough time to the economy to start raising rates. So in my opinion, they're going to see the same thing, probably not 8 years. The pandemic happened in 2019. My guess is maybe 5, maybe 6 years the most before they start raising rates, because this was also a much quicker recovery compared with back in 07, 08, when it took us 2 years to recover. Over here, this economic recovery is probably the fastest on record, when we basically dropped in that 3-month period, and they're now starting to go back up for employment, for the markets, for jobs, for everything. So that's why I think they can't hold it longer. They may have to do it, but it's going to be like 5 to 6 year timeline. For tapering, it's a different story. I think tapering, they can start doing it. It's going to affect more sort of like those longer term yields, the 10-year yields, because they're not going to be purchasing as many of them as they were before. So when demand drops for the 10-year yields, price basically starts to come down. And when price starts to come down, yields push higher because of the inverse relationship between the two. So again, next week, we've got the SEP, the Summary of Economic Projections. They're going to tell us what their projections are in terms of the employment, the inflation, the GDP growth. That's going to be very important, because a lot of people were thinking about a potential stagflation story where, you know, inflation keeps going higher and the economy starts slowing down. That's going to be stagflation. But if inflation starts coming back down, the fear about stagflation is also going to start to kind of go away. So again, this is just the first step. We want to see more readings start pointing downwards, and that is going to benefit longer dated stocks, sort of like tech and growth stocks in general, because the 10-year yields is called a risk-free rate. And again, all of this will be covered in the tutorials that I'm creating for you guys. It's kind of used in our DCF analysis as a risk-free rate, and future cash flows are worth more if interest rates are lower. Future cash flows will be worth a lot less if interest rates are much higher. So that affects valuations. All right, so that was a quick sort of economic tutorial there, but the markets are green, and that's what we really focus on. And the VIX dropped significantly. It was down a little bit over 4%, coming back down to 18.5. So that's a strong drop here as the markets moved higher. Let's take a quick look on some of the individual stocks. So Palantir caught some bids here, pushing higher, up over 8 basis points. Still not as high as where we were a couple days ago, but still pushing higher. But I did miss out on some few questions here, so let me take a quick look. So what about the new tax law incoming? So again, that's a proposed law. Crane, that's a great question. So that's a proposed law. We'll see if that actually passes through. Both corporate tax and capital gains tax are the two types of taxes that I'm really focused on when it comes to the market. Again, corporate tax rate proposed, I think we read it yesterday, it was roughly over 26%. And capital gains tax, they're also looking to raise that, I think, a few percentage points as well. So all of that is going to basically suppress investing in general. Corporate taxes, when they go up, that's a huge expense for the company. As a result, EPS drops, the bottom line becomes less profitable. So that is going to affect the markets as well. So, all right. Would the expected September correction happen? Again, great question. I personally can't pinpoint exactly if there's going to be a correction, if there's going to be a crash or whatnot. It's really difficult for me to predict, but instead what we can do is we can understand the data that's coming out, and we can really start to make sense of it. Next week, like I said, we've got the FOMC meeting. If they announce any type of tapering plans before the end of the year, which I do expect them to, I expect them to announce some tapering before the end of the year. That could result in some sort of like a negative catalyst for the markets and for the volatility to spike. But again, everybody's expecting it. How much of that is priced in? We'll see. What the market thinks. Again, this right here, you'll notice that the Fed to confirm plans to start tapering bond purchases at the end of the year, and he said that this was now priced into the markets. So expectations are now putting attention to, basically the people are turning more towards the Fed would start hiking interest rates. That's the next sort of goal that they have. So it's kind of hard for me to pinpoint, but I'm prepared for any type of a correction or a potential pullback in the markets while staying invested comfortably. All right, so let's take a look at some individual stocks here. We got about 40 minutes plus before the markets open. We can go over a lot of individual companies here. Let's see if there's any stocks you guys want me to go over. I'm more than happy to. Green or red poll, we can do that for sure. So all right, for our poll, 254 votes. That's really good. So 40% said we would go higher, and 60% said that we'd stay flat and go lower, and we went lower. You guys are great. I mean, you guys have always been on point with these polls. All right, let's see. Market open. All right, so another poll coming your way. All right, let's start with Visa. So Visa, it had a reasonable second retest of that 200 SMA, so we're still in this downtrending channel, which is good because we did establish a position at roughly 225. I'm waiting for this stock to basically break below 220, come down to 205, so I can buy more at that level. So that's the kind of like an ideal price where I would load up more shares. This stock still trades at a pretty rich valuation, similar to MasterCard. Visa, MasterCard, they both trade at 20, 25 times sales. So if you come down to this metric, so 46 times earnings, 21 times sales, still a very reasonable sort of valuation for the company. So there's risk in terms of valuations, but like I said, the company is phenomenal, great earnings, great margins, like phenomenal margins. I mean, this is probably the company that has the highest margins in the world. We're talking like 90 plus gross margins, and 47, almost over 50% in net income margins. So all in all, phenomenal company, great brand. It's going to be around for a while. They're doing a lot of acquisitions. It's just the valuation that you want to pay close attention to, and if it comes down to your desired levels, in my opinion, I will be adding more shares because it's a strong long-term hold for me. Let's take a look at Netflix. So Netflix has been selling off. This should not be a surprise to anyone because of the RSI and the MACD that was really, really overbought. And we hit new all-time highs at 612. We got a couple retests at those levels. Got rejected at that resistance, and then we started to pull back. And of course, 593 is going to be that new resistance level to watch, all the way as low as 557. I'm going to quickly jump over to cryptos here very quickly because I didn't really talk about them. So Ethereum up over 1.6%, so just under 3340. And Bitcoin also seems to have caught some bids here at 46,350, up over 3% on this better inflation report. So Jason says we're going to be green until next week, FOMC meeting, then we freak out a bit, and then we sell off. VIX will drop to 15.5 next week, and then we retest 20 levels on the VIX. Wow, very, very specific prediction. I love it. That's great. That's awesome. So for the Bitcoin, just over 3%, 42,000, anything inside this green rectangle is going to be that support level to watch, right? Area of demand. And same with Ethereum, right? If you come down, right now for Ethereum, I feel like we are testing that 50 ES SMA. That's a simple moving average. But if we do sell off even further, that green rectangle is the one to watch, somewhere between $2,800 and $3,000. So Remy, have you spoken about inflation data yet? Yes, we did. We actually just ended about 2 to 3 minutes ago. So if you want to go back like 15, 20 minutes, you will get the whole sort of like the analysis on inflation. And then you can jump over to the live stream here. All right, so we continue. So let's go over to CrowdStrike. So CrowdStrike is another stock that I want to have in my portfolio. Definitely want to add this, but it's just, again, the valuation is really high. And I want you guys to make a decision for yourself, right? This is very subjective, right? For me, 52 times sales is high. For some people, it may not be, right? If you're willing to take on more risk, this may not be high for you. It's all subjective. Traditionally speaking, and just based on the valuations that I like to purchase, 52 times sales is rich for myself. So if it does come down, I will gladly buy CrowdStrike, but at a huge discount, right? I'm not going to be buying at this level. There's a couple things that can happen when the valuation is this high. Can anybody tell me the two things that could happen to bring the valuation down? We're talking price to sales. Very simple. Right now it's trading at 52 times sales. Can anybody tell me what are the two things that can happen for this number to come down? 52 times sales numbers to come down. There's two things that can happen. So let me know what you guys think. In the meantime, I'll just talk about the technicals. So 250 is that support level right here. So that right there is going to be that support. So Nicholas, either sales go up or price comes down. Absolutely on point. Absolutely on point. That's 100% the correct answer. So either the price comes down or the actual fundamentals, the sales number, the revenue goes up. Not the earnings. So a couple of you guys mentioned earnings. Not the earnings, but the revenue. We're talking price to sales. When we were talking about price to earnings, that would have been the correct answer for earnings. So either the sales go up or the price comes down, right? That's when this metric will come down. And the valuation will become a lot reasonable than where it is right now. So 200 and cookie for Nicholas. That's true. So $250 is going to be that next support, all the way as low as 228. But ideally like 168. I know it's a very steep discount. CrowdStrike may never get there, but that's the price that I'm willing to pay for this company, unless the fundamentals substantially increase, right? Revenue substantially increase. All right, so let's see. Lucid. Let's take a look at Lucid very quickly. You guys are so funny. So this right here is going to be Lucid. $20 got hit. So we saw that drop down of over 10% here after the sell-off on September 1st. There was a lot of volume that kicked in. We filled this gap perfectly. So that was the gap that we were talking about during their live stream. $20 was that next resistance that I had on the stock. And right now you'll notice that we are hitting that resistance and we're back down over 4%. I'm not sure if there's a catalyst for Lucid that came out, but all right. So Lucid shares rise after CFRA begins coverage with a buy rating. So this was on September 9th. So we're talking like last week. But other than that, I'm not aware of a catalyst that came out for the stock that's down over 4%. But $20 and this 70 level is going to be that next resistance. Support is going to stay put at $17.50. And again, this stock also at 32 billion market cap, trades at a very rich valuation, in my opinion. So there's no data point here, but I can just tell from the fact that the market cap's so high and the revenue is really not existent until they actually start delivering vehicles. Entry point for AMD. Let's take a quick look. So Advanced Micro Devices. So 102, we had the buyers step in at the 50 EMA. I mean, that was that was a support level that we talked about during our market update. So you'll notice that we are perfectly trading at about $102. Yesterday we came down to 102.63 before the buyer stepped in. Now, is this momentum going to stay there? Are the markets going to continue to push higher? Are we going to make new all-time highs? And that is still to be seen. But in my opinion, I do expect AMD to continue to kind of trade sideways, consolidate for a little bit. $111, $110 as a resistance, 102 as the next support level to watch for Advanced Micro Devices. Xilinx deal is going to be very important for the company. Once that passes, once that goes through, then I wouldn't be surprised to see a retest of 122, 125, potentially back up to new all-time highs for the company as well. All right, so let's take a look at John Deere. This is a stock that we haven't talked about in a long time. So DE. So this is a company that actually had been rallying a lot, on potential of this infrastructure bill. On all the construction companies like Caterpillar followed the same trend, John Deere followed the same trend. It was just on this ascending pattern. I like to call this kind of like a basketball pattern, which is like, very, very easy to understand. It's like one of the easiest swing trading patterns that you can find on the market. It's like you buy off of that 50 EMA every time it comes down. It's just like bouncing off of that support every time it comes down, right? The S&P 500 is a prime example of this basketball pattern, right? It just continues to follow sort of like this trend of how it's just bouncing off of that 50 EMA once, twice, three times, even more times in the future. But DE, after we broke down below that 50 EMA, so this right here was a breakdown that we started to act as some type of resistance before we started trading sideways. So in terms of a level to watch as a resistance, I watched this roughly at $390 to watch. And support level is going to stay put at close to a couple levels here. So the first one is going to be roughly around this. Actually, it's going to be a little bit higher, close to 351. So 351, in my opinion, previous support here, resistance that we're just struggling to break out over is going to be that next support level. We're just kind of range-bound pattern, similar to what we had over here. But I believe there was a negative divergence for John Deere. So you'll notice the higher highs over here and the lower highs being formed right there before we saw that drop, before we saw that pullback from the negative divergence, and from all-time highs, it dropped over 20%. So again, we're consolidating sideways. We can make an argument that we're starting to form that negative divergence again. So I'd be very careful, kind of around that $350 support, all the way as low as that 200 SMA, all the way as low as that 300 simple moving average for this company. All right, let's take a look at Tesla. Tesla, again, in this higher high, higher low pattern. Not really for us to go over anything here, other than there is a resistance between $750 and $780. So anything inside this red rectangle, I find it to be like a wall for Tesla, so to speak. So previous support, resistance, we have gone rejected at that very level. coming in from April 12th and 13th. So previous resistance here, we're just struggling at that level for Tesla. Once we get a breakout over 780, we should be in the 800s very, very soon. But that is going to be an area of supply or a resistance to watch for Tesla. Support stays put at 700. We got the moving averages there. We got the higher low there. And this has been a strong uptrending pattern, meaning that we are just making this higher highs and higher lows. Sometimes the patterns will, give you a lot of sort of different types of information. Sometimes it'll be hard to make out exactly what the pattern's trying to do. In that case, I would just let it develop more, as it gives you like a more clear direction. Right? Sometimes it will be like all over the place. Like for example, Alibaba is a great example. Somebody's asking me about the end of year price target. It's kind of difficult for me to put a price target on Alibaba based on the fundamentals because of the regulatory risk there is. We can't price that in. I mentioned this yesterday as well. I can't price the qualitative piece into numbers, right? The risk is there and I can't put it into a model. What I can do is I can tell you based on the fundamentals and the valuation, this is significantly undervalued. This should be way over $300 plus, but how much is that worth when there's constant risk about this potential regulatory and scrutiny investigations happening in China? So again, we're down a little bit of 1.5%. 160 to 145 is going to be that support level. We're kind of approaching that demand area. Once again, that is going to be an area of support to watch for Alibaba. So, in one of these days, if it does continue to kind of dip inside this sort of range, I may consider this as a new position. But I want to be very clear, there's going to be consistent risk. We've always taken one step forward, two steps back with Alibaba. That's been sort of like the trend, and it's always been kind of like, we're trading in this downtrending pattern. We start pushing higher, that ray of hope comes in, and then something comes on from China, and boom, we're back down to making lower lows. Then we start pushing higher, we start believing that this is the actual trend reversal, and then boom, all the way back down, right? So that's been the pattern for Alibaba. Unfortunately, as great of a company as it is, that's the reality of how it's traded. So 161 to 148, next support level to watch for this company. That's also where we saw a lot of buyers step in. So we know for a fact that that's a good valuation for Wall Street, because we had a lot of buyers step in. Look at the volume on those days. August 23rd, how many shares were traded? So we had over 88 million shares traded for Alibaba, and the average is around 34 million. So that's almost three times the average 10-day volume for Alibaba. So we know that valuation is appealing, that's attractive to Wall Street, right? That's where they stepped in. So we'll see. Baba, if it can stay above 100, that'll be a miracle. That's true. The way this is going, it's been very, very disappointing. All right, let's take a look at Apple. Keith, do you have a degree in economics? I have a degree in finance, I think, and I took economics courses as well in school. But let's take a look at Apple here. So Apple had some regulatory risk. We're still up over 40 basis points. Today is actually the day, so 10 a.m. Eastern, right? Or 10 a.m. Pacific is when we've got that event for Apple. So I think it's going to be a great presentation. I think they're going to actually do the live stream on YouTube. So I would highly encourage you guys to watch it. I'll put a link in our Discord. Everybody who's an Apple investor, which I believe most people to be, should be at least paying some attention to what they're announcing, what the new products are, what they're actually looking to do over the next fiscal year. So the new fiscal year for Apple is actually started, it's actually going to start in October. So October 1st is when the new fiscal year 2022 starts for Apple. So that is going to be very, very interesting. They're just wrapping up on the fourth quarter fiscal year for Apple. So it's different than calendar year. So that's going to be very interesting. And 150.29 is going to be the level where it's trading right now. So 150 is going to be the new support, because right now we're trading just above that level. And again, very, very solid higher low validated. If you go over to the 4-hour chart, you'll notice that we validated that level consistently over here the last couple of days before pushing higher. So I'm actually going to remove this and this, and I'm going to keep this as the higher low for the stock. So it's going to be green support to watch, and 155 is still going to be that resistance. All right, so let's take a look at lows. We'll talk about lows. Milad, yes, CPI was released. We talked about it at around 8:30 a.m. Eastern, so 30 minutes ago. You can literally just go back 30 minutes and you'll get that report and the analysis on that as well. All right, so lows, looks like it bounced on earnings. I think we did cover it during one of our live streams, and now it looks like it's starting to form some type of a bull flag. after this rally. So this was a strong uptrend here, and we're just starting to form that bull flag. If it breaks over this resistance at 209, I think that would be a level to start considering just as a swing trade or like a momentum trade if it gets that breakout. So that could be like a bull flag breakout here over 209, 210 levels for lows. But overall, in general, it's just been trading in this range where it's got a strong resistance at 209, 210, and a support at reasonably at around 184-ish, 185, and just a lot of consolidation sideways. So that's the overall pattern, but a more short-term pattern is potentially a bull flag for the company. Let's talk about Intel. So Intel had a really strong day yesterday. It's up another 0.5% today. So definitely pushing higher above those moving averages. We got Intel now trading above the 50 EMA. We got Intel trading above the 50 SMA as well. So, next target, next short-term, near-term target is at $58. This company is still undervalued from some of the traditional metrics. Great yield at 2.5%. Strong new management, great potential for future growth because as they continue to kind of invest in infrastructure, they've got big plans for what they want to do 5 years out. So in my opinion, this is a stock for many to consider as a value play, just based on how undervalued this company is and the dividend that it offers. So, still for the longest time, it's been in this range, consolidating sideways with significant opportunities for swing trading here. So 55% gain here. We saw a very similar March 2020 drop and then a jump of 48%. But then we got a couple delays and a lot of delays, and the management was let go, and a couple gap downs as well. But every time we've kind of filled that gap for Intel. So that's been always there. One thing that Intel does very nicely is that every time it gaps down, it fills that gap up, right? This right here was a perfect fill. We gapped down. This right here was a perfect fill. We gapped up. We actually came down to fill that gap right over here, and then we pushed up. So this is still the gap that we need to fill for Intel right here after the gap down that we saw over here. We tried to come back up, then we sold off even further. So 52.30, kind of like a support. We're still consolidating sideways. $58.44 next resistance and target, all the way back up to $69, $70 a share. I think that's a reasonable upside. So that's a good 25-26% upside for Intel. All right, let's take a look at HIMS or HIMS for Robinson. So this right here is going to be the stock. Seems like we've done some analysis on this. So trading in this downtrending pattern, meaning that we're still making this lower highs and lower lows. Support's going to stay put at 782. Resistance is actually going to be at this level at close to 981 or 980-ish level, because that's kind of aligned with this previous support right here. So horizontal resistance. This is going to be the red line to watch. And this right here, the lower highs, is also going to be the one to watch, right? So horizontal lower highs is the pattern, or like inside this downtrending channel for HIMS and HERS, whatever this company does. I've actually never looked into this company. Telehealth consultation platform. So yeah, that right there is going to be the resistance support. Stays put at 785, 780. So Apple, we've gone over. Let's take a look at DocuSign. So DocuSign started to come down recently, breaking down below that 50 EMA. So 238 is going to be that next support level to watch for this stock. So I very, I like DocuSign a lot. I think it's got a lot of potential. Similar to Adobe, like some of the SaaS companies that I really like are Adobe, Intuit, Autodesk, DocuSign. These are companies that, in my opinion, are high margin. They're doing really well in terms of fundamentals, strong growth, strong revenue margin growth as well. And the balance sheet is strong, usually for these SaaS companies, because they don't have a lot of CapEx to basically spend on, right? So right now, this stock, negative divergence forming, that could lead to some more potential downside here. So I wouldn't be surprised to see 236, 237 retest. That's going to be aligned with that 200 SMA and the 50 EMA. And if the RSI also comes down, I think that would be like a sweet starting point for me for this company. All right, let's take a look at PSG USDT. Is that the actual PSG token? Is that what you're asking me to analyze, Miguel? All right, let's take a look. PSG USDT. All right, so yeah, so this is in fact the PSG coin. I don't know. I'm not a huge fan of PSG, even though I do like Messi, but I'm not a huge fan. And I know this is going to spur up some conversation and some debate, but Ronaldo is the greatest of all time. He is the real GOAT. He's the best player of all time. Fight me in the comments if you have to. But That's it. I said it. But PSD token has got a resistance at roughly at this level at 56.67. And this right here is going to be the support. So support is going to be roughly at around these levels, right? So support at roughly 25.80 is going to be the level to watch. And we're just like consolidating sideways for the most part. So people do agree with me. I'm going to actually start a poll for that. Should I start a poll for that? But this right here is actually going to be the lower highs that it's forming right now. So this could be seen as some type of bullish pennant that could lead to a potential breakout even further, right? Talent there doesn't matter. Like, my biggest concern has always been how Ronaldo's been able to challenge himself, go to different clubs, win different leagues, and still be on the top in terms of international goals. But Messi has always been in one place. Now the real competition starts once he's out of Barcelona, right? That's what I like about Ronaldo, is his mentality, right? His discipline and his just the passion towards his game, and is willing to take on more challenges. I think that's what really matters. But all right, support level like roughly 25.80, resistance 56.67. You know, it's kind of forming like a bullish pennant. We'll see if it breaks out to the upside. All right, Take-Two Interactive. That's a great stock here. Let's talk about it. So Max, 66 basis point decline yesterday. 151 is going to be that next support level to watch for Take-Two Interactive. But in you know, in all due respect, they're both legends of the game, and you know, I'm just really happy to be alive while they were playing for the last 15 years. I mean, overall, you know, respect for both of them and what they do. So all right, for Take-Two Interactive, 151, next support, all of his was 140. All right, so that right there, again, I will be buying more at close to 140, right? If it breaks down, I will be buying more shares of Take-Two Interactive, just based on, but the one thing that I will, you know, tell you about Take-Two is that the valuation is high. We talked about it over the weekend. If you guys haven't really checked out the complete you know, analysis on it, I would highly encourage you to watch it. But 140 is going to be that next support level where I would personally add. The valuation is still a little bit to the high end. All right, so let's see. Let's talk about SDC. I don't know what that stock is, but Smile Direct Club. Okay. Smile Direct Club pushing higher over 5% here pre-market. It had a really strong day, 16% jump on Monday, but right now it's just you know, in this downtrending pattern where it's continuing to make these lower highs and these lower lows. So this right here is kind of like the pattern where it's just making this lower highs and lower lows. So next resistance on the day is going to be 624, right? 625, 624. That is the 50 EMA to watch. And if you do break out to the upside even further, then this lower high is going to be the one to watch, right? So that's the lower high that we're going to keep a close eye on for Smile Direct Club. I've actually never looked into the fundamentals of this company. Wow, so it looks like the revenues are pretty reasonable here. 2.75 times sales, so not bad. But the revenue's been growing with a recent dip here in 2020. And quarter over quarter, they've been very stable. The balance sheet, doesn't really quite look great. So we got about $777 million in debt with $376 million in cash. So about 2 times debt as much as cash we have on the balance sheet. I'm assuming they're probably investing a lot on the infrastructure. They're investing a lot on the growth of the company right now. But yeah, keep a close eye at this lower high. This is going to be sitting roughly at $7 a share. Like around those levels for Smile Direct Club. All right, let's take a look at NEO. So NEO we haven't gone over in a while. Flat on the day pre-market. It's kind of like at this testing point, whether that 300 SMA is going to hold up or we're going to break to the downside. I'm fully prepared, like I said, to see $34, $33. Even if you do break to the downside, it's not going to be a shock to me, just considering how much the bearish pattern this is. Like, the context of the pattern is still bearish. We're still moving down, making lower highs and lower lows. So if you break down, $34 is going to be that next support level. Resistance is going to stay put at 41 bucks. Tattooed Chef. Let's take a look at TTCF. So TTCF broke down yesterday, so it was down a little bit over 3.4%. So we're now starting to break below those moving averages once again. $19 is going to be that next support level to watch right there. So Edward will break down BBBY in just a second. But $19 is going to be that next support level to watch. The RSI is coming down. It was overbought when we saw that initial rally. The MACD was overbought as well. and now we're starting to see that push to the downside as well. So $19, that next support level, all the way as low as $15.50, right? That is going to be that next support to watch for Tattooed Chef. So fundamentally, this company remains a little bit overvalued. Their share dilution is very high, and the growth projections that they have, I've done a complete fundamental analysis on this. I would highly encourage you guys to watch that as well. But they actually have projections till 2025 to grow their EBITDA and revenue. And 2021 was baked into those projections, and they've already missed the 2021 guidance, and they've reduce their guidance and their projections as well. So my question in that video really was, if they missed 2021 guidance and projections, what are the chances they're going to hit 2025 when they see revenues over $1 billion, EBITDA, I think it was roughly 200 million. I have to go and rewatch my own video, but that was the whole fundamental basis of why I personally believe the company was very richly valued. But in terms of a technical analysis, definitely did suggest a possible swing trading opportunity here. For Tattooed Chef. So right now we're starting to come back down. $19 is going to be that next support level to watch. All right, let's take a quick look at Adobe. So Adobe, I'm going to be breaking down the earnings very soon. It was down over 2% yesterday, coming down even further. And this stock actually deserves to come down because this has just been ridiculous and how much it's gone up, over 43% year to date. I think this stock is up over 29%. But Adobe is one of my favorite stocks that I don't talk about very often. But this is one of the stocks that we talked about like back in 2020. It's such a nice company. It's such a company that it's kind of like a Microsoft, right? It's a SaaS company. It's very similar to Microsoft. Beats their numbers, beats their revenues, has a strong guidance, continues to retain customers, grow their business, has a very sticky business model, right? Once you're using Premiere Pro, once you're using Adobe products, you're kind of in their ecosystem forever, right? Because of the shortcuts, because of all the applications, because of everything that you're using, it's very difficult to switch from Adobe products to something that's Apple is creating, like Final Cut Pro or anything like that. I would never do that, right? I'm so used to Adobe products that I'm just going to continue using it. So I think that retention, that sticky business model is so strong for the company that it's just a really nice sort of business model that I really like to own. Got no dividends, so eventually I do expect the company to start paying dividends. But if it does come down to 525, like kind of like those moving averages retest, I will be buying more. Lucid, we covered earlier, so you're more than welcome to watch that if you go back a little bit. Let's take a look at BBBY. So Bed Bath & Beyond. All right, so let's take a look at this stock. So for the most part, it's just been consolidating. If I'm not mistaken, again, correct me if I'm wrong, was this part of like any type of a short squeeze or anything, or like a Wall Street Bets sort of deal here, Bed Bath & Beyond? I'm not quite sure if it was, because I'm just trying to predict this based on the actual spikes that I'm seeing on volume. So I don't know if it was. All right, so I got a couple of yeses. All right, so maybe it was because of the spikes that I'm seeing for this. But it's had a strong rally from lows of about April 2020. It rallied over 1,400%. It was up a little bit over 578%. Right now, testing that 300 SMA. So that's a really strong support here to watch for Bed Bath & Beyond. That's going to be sitting roughly at $22.70. Previous support, they've validated support right now that we're coming down to. This stock also kind of reminds me of Corsair Gaming, where it's got a couple spikes here based on Wall Street Bets and then back down to basically support levels, and right now testing that 300 SMA. So let's take a look at the valuation here. So revenues, strong decline year over year coming in from 2017. As a result, it makes sense why Wall Street would want to short something like this. 33 times earnings is rich for a retailer, for like where margins are really low. So if you take a look at the margins here for the company, negative 1.63%. In 2017, they were profitable, but 3.4% margins. So the margins are really low for the company on declining revenue, and the valuation is at 33 times. So I can see why there was short interest increase in this, but price to sales very, very low, 0.26. That's expected from a retailer. Let's take a look at the balance sheet here. So it doesn't look like they have a lot of cash or assets. So cash only 1.13, and debt is at over 3 billion. So 3 times more debt than they have cash. So fundamentally, it's not the best in my opinion, but they've got earnings coming up, so maybe I'll watch those. And technically they've got a support at the 300 SMA sitting roughly at 22.69 to watch, and resistance I think is going to stay put at close to $30, where we have just consistently gone rejected at, and of course the few spikes that we've seen based on Wall Street bets. All right, so let's take a look at that's a lot of stocks here. So let's take a look at Enphase Energy, and then we'll go over Upstart. So Enphase, broke down. Feels like it has been breaking down, but the buyers looks like stepped in at 150s, and today we're up another half or 88 basis points here. So 150 is going to be that next support. All of it was $130. Those are two levels that I'm watching for Enphase Energy very, very closely, and of course 174 is going to be that next resistance to keep in mind for the stock. All of it is at 193. I'm bullish on the company, just not the valuation yet. And I think this is a very, very different type of market. It's been a very challenging market in terms of, acquiring more stock or shares of companies because of the valuations and where they are. There's not a lot of opportunities, in my opinion, in the market. So if you have something, you may consider want to hold on to it. Because here's the thing, right? Once you start selling and trimming, you've got cash, and you have to do something with that cash in order to deploy it somewhere else, because inflation, like we checked out earlier, is still pretty elevated, right? So purchasing power, you're losing that with inflation. And this is on top of your like 18 or 20% cash that I'm talking about, right? That you have maybe on the sidelines waiting for opportunities. But other than that, any additional excess cash, in my opinion, that needs to be stayed invested in the markets, and that's why you can find more opportunities elsewhere. Even if it's like holding on to some dividend stocks that are very stable, that are paying like 3, 4, 5% dividends. In my opinion, that's very smart, as opposed to simply just holding on to cash. Anything that's excess, right? On top of that 18-20% that you're holding on to for a potential correction. All right, let's take a look at Upstart. So Upstart, I think, had a rally yesterday. Well, not quite a rally, but still up over 2.79% yesterday. So the day before we were down over 6%, and I can tell you this is a stock that has a lot of FOMO right now. So how much cash in percentage do you personally hold right now? We're seeing 36% because of the market environment. I roughly have about 25% or so. I think I have to recheck because we did buy a little bit yesterday, but about 25% is what I have roughly. So Kareem, what are some good dividend stocks? So right now I've got Walgreens as one of my primary dividend stocks. I will be looking into Intel, and I will be looking into a couple other dividend stocks as well that I will be sharing with the group very, very soon. But Walgreens is my dividend play, along with Intel that I'm looking to start a position very soon, and then some of the other sort of couple more in the financial sector and some other sector as well. So Steve, good morning. Did the CPI come out yet? Yes. So you can go back to 8:30 a.m. Eastern. You can go back exactly 1 hour on this live stream, and you can check out the CPI data and the analysis on that. But Upstart, we got pretty much flat. It's still up there. Our size overbought. The valuation's really rich. My analysis on this one is that I'm kind of avoiding it. I got a position already. I'm not touching it. Just not trimming, not buying, not doing anything. Just letting it be. Because I think this has run its course, at least in the short term, with over 1,800% since IPO'd, or 700% year to date. So I think it's done really, really well, and it could underperform the markets for a long time, meaning that it could go sideways, similar to what Tesla has done, traded sideways for a long time after hitting 900 in February. Since then, it's just traded sideways. So that could happen for Upstart as well. Doesn't necessarily mean that it's going to crash back down, because there are plenty of buyers to buy Upstart even at a 10% pullback, but I just think that it's going to start trading sideways. Let's take a look at TNT, Peak Fintech Group. Again, it kind of looks like a very, very small cap company. 817 million is the current market cap. So strong rally here from July, up over 700%. Again, very volatile stock. I may have to bring up the 9 EMA on this one because of how how diverged. I don't even know if that's a word, but how much divergence we've seen from the moving averages for this stock. So if you bring out the 9 EMA, so you'll notice that we're just consistently validating that support to the upside, right? We're just moving up, and up, and it's there's a lot of volume for this stock as well. So volume has been roughly 350,000 yesterday. So it's actually not even not even a lot of volume for this stock. So the only problem is if you break to the downside below that 9 EMA, just be prepared for some more volatility. And even coming down to 660, that 50 EMA, that's a 30% drop. So it's a really volatile stock. It's not something that I would like to personally trade, just based on the volatility and the risk that it carries. Not to mention the fundamentals, more financials. So it doesn't really have anything in terms of income statement, balance sheet, cash flow. We don't have anything on here. All right, so quick update on the markets here. We got about 9 minutes left for the markets to open. We got the QQQ ETF still up 39 basis points after that rally on CPI data that we saw. We got the SPY still up over 34 basis points, and we got the Dow Jones still up over 32 basis points as well. So strong move to the upside for the broader markets. All right, let's take a look at CTRM very quickly, and then we'll check on the VIX and some of the cryptos as well. So, all right, let's take a look here. So $2.44, we got 194 million. I mean, this is like such a small company in terms of the market cap, but it looks like we have done some analysis on it, because I do have something. But it's just been on a strong downtrend here. This stock was really at $20 back in February. Wow. That was like a 1500% gain, but I can't believe this stock was at $20 in February. That's a significant drop here. But support level, keep a close eye at this $1.86. But it's kind of hard for me to analyze like these companies that looks like the revenues are growing 5 times sales. So that's good. Let's take a look at the balance sheet here. So very reasonable cash to debt, but again, it's a very, very small company. So I would have to really kind of dig in deeper to understand what it does and how it can grow to like even like 500 million or $1 billion valuation, right? If that happens with no dilution, then we can see some strong growth here. But for the most part, there is going to be a resistance in the near term to watch at close to this $2.80 level, so 270s. Kind of aligned with this previous resistance where we got rejected at. So very, very consolidated pattern. So all right, CTRM had a reverse split. Okay, so I was gonna, okay, so yeah, that makes sense right here. Right there it looks like, so split of 1 to 10. Okay, so okay, that makes sense why the stock price is kind of being reflected like that. But yeah, a lot of consolidation here sideways. Resistance at 270, support at 186 for the company. All right, let's take a look at Home Depot. So Home Depot, had a breakout here, back test or like a retest at 320. So this is going to be a new support level to watch for the company, and resistance is actually going to stay put at close to this 330 something level, $340 level over here for Home Depot. So it's kind of like has these patterns where it consolidates sideways a little bit. So, over here starts trading sideways, and a huge breakout in March 2021. And of course, it rallied over 100% here, then consolidated sideways, and a breakout over here. And now overall, it just seems like it's consolidating once again in between this range, where it just continues to have a resistance at close to about 340 levels, and support level at close to 297, as low as 320. Thank you, Anfu Drew. I really appreciate that. So, all right, the markets are looking good. The VIX is down a little bit over 3.4%. We got Bitcoin also pushing higher over 3.38%, with Ethereum also pushing up. It's been a really long live stream, but we're going to break down a few more stocks. But before we do that, I want to quickly mention that if you want to get access to all the real-time updates, buy and sell alerts, and of course get access to our future private live streams, we will start doing them in October and November. After these market open live streams, we'll be doing private live streams as well. And of course, a lot of other benefits and analysis. The Patreon link is going to be down in the description below for everyone to join September. After that, early bird and all the other tiers will potentially, if you fill up enough spots, will be closed. So if you want to take advantage of that, feel free to do that. And again, I will put a link over on the live chat. United versus Young Boys tonight. Yes, that is true. I'll be watching Champions League. Very, very important. It shouldn't be that bad for United though. They should be able to easily win. I really think that he's not going to play as many games as we like him to. I think it's mostly for the bigger Premier League and UCL games. So we'll see. And also, guys, just please make sure that you're subscribed to the channel. We talk a lot about fundamental analysis, technical analysis, and of course macro analysis as well. I'm breaking these stocks down for all of you guys, and I'm more than happy to break down as many stocks as it takes. Just please make sure that you're subscribed if you want to be. Of course, I'm not forcing you to, but if you like the content, if you enjoy it, please make sure that you hit that subscribe button. It's absolutely free. It doesn't take that long. Steve, the MacBook is great. Still learning about everything every day. So still, kind of working through the process here, and it's great. I love it. All right, so we got about 4 minutes left. We're gonna set up some charts here and take a look at the markets and how we actually trade intraday. So our poll just ended, and we had 70% green, 29% red, almost 400 votes. So that's very, very strong. And we're gonna keep Tesla over here. We're gonna keep Apple on the top left. Right, heard about semiconductors are raising their prices due to the shortage. This might be an opportunity for them to increase their prices. Also, they're not producing full capacity to keep prices higher. Yeah, I mean, I've been hearing some stories as well. A few people reached out about companies that they run, and they're seeing the prices go up, and as a result, the consumer prices are also going up, and they're raising prices on the consumer side. So this inflation report, like I said, was great. I don't want to take away from the report that we just received, but I also want to, identify the fact that this is not over, right? This could very well go back up in September, in October, November, December, and we could see inflation spike once again. So nobody knows, but we can just take it month by month and kind of understand what that reading looks like and make a sound judgment based on that. But overall, the goal is to bring it down to 2%. That's the Fed's goal. We'll see if that actually does happen. If not, then we'll just continue to monitor, what inflation looks like, what employment looks like, and what interest rates are going to be. Because our goal, my personal goal, is to acquire a financials or a banking stock very soon to take advantage of a potential rate hike in the future. So I'll start doing that as well. Just purchased like a recovery stock last week, and I will be adding some more other value / dividend / interest rate sensitive stocks in the future, while fully staying invested in tech and growth. I still believe tech and growth is where it's at and where it needs to be for longer term growth, but while keeping like a more diversification into some of the other value and dividend stocks. All right, so we got about 1:20 left for the markets to open. We got Apple over here, still up over 0.5%. I'm gonna actually put Amazon on this side to see where it's trading. Amazon, I still believe it's very, very undervalued. I really want to buy more. I think they just announced that they're going to be hiring over 120,000 new workers and paying them roughly $18 an hour. So this right here was the actual catalyst. So Amazon plans to boost U.S. workforce by 125,000 new jobs. Said Tuesday that it plans to hire additional 125,000 people, in addition to its previously announced plan to open 40,000 corporate and technology positions. It opened more than 250 new fulfillment centers. I mean, this company, I can't even imagine or foresee what this company is going to be 10 years from now, right? With everything that they're doing. This is they're going to soon be doing $1 trillion in revenue, in my opinion. They're going to be able to do it as they're competing in so many different verticals like shipping, freight, cloud, point of sale, e-commerce, of course, is their big business. But Jay, what banking stocks are you looking at? I will be talking about that. I think there's a couple of them, Bank of America, JP Morgan, but even ETFs that I'm specifically looking at. But even could be like a regional bank, like small cap, mid cap bank. It could also be the one that I'm looking into, considering that they have a very, very sound yield to them. All right, so the markets are open here. We got the NASDAQ is up a little bit over 42 basis points. We got the SPY pushing higher. The Dow is up over 95 points. Or 27 basis points here. Let's see if you actually hold on to that momentum intraday, or if you see any type of selling pressure to come in to the markets. And this right here, of course, is going to be individual stocks. We got that Apple spiking over 151, Amazon almost at 3,500. We got Palantir almost at $26, and Tesla back up to over 745. Of course, a lot of stocks handsomely in the green. DATS. And somebody talked about it. That's why it's on our watch list. Let me just bring that up. So this right here, that chat. it's on my watch list because I am going to be doing some research on this, looks like, but definitely pushing higher over 12% here. Strong breakout over those moving averages, continues to push higher. If anybody's interested in this stock or is watching this level, 878 is going to be the resistance to watch. All right, let's just continue to focus here. We'll see how. All right, the stocks that are in the red. We got AMC slightly down, just trading under $51, down about 1.4%. GME is down over 2%, just trading under $200. We got SoFi pretty much flat, just over $15 a share. Fiverr is up over 36 basis points, just trading under 190. Fiverr had a really strong day yesterday. Let's see, Peloton flat on the day, Take Two Interactive flat on the day. We got Tattooed Chef flat on the day. Enphase, a lot of stocks are just flat, up 30-40 basis points on the day. With big tech, so Amazon is up 65 basis points, Shopify up 33, Nvidia is up over 60 basis points, PayPal is up over 83 basis points, Palantir is right here, so yep, Palantir definitely shooting up here. And we got Google up over 67. Google needs to come down. I need to buy some Google. I need it to be down a little bit. AMD is up over 60 basis points. Coin pushing higher, 1.8%. We read the catalyst earlier. And Mara is also up over 3%. Where's Neo? Let's see. So Neo, all right, let's just go down here. All right, Neo is up over 1.2%, just over 38.85. So still pushing up over 38.85 here. All right, the broader markets, there we go. The Nasdaq now started to pull back. We'll see if this momentum continues to hold up or not, because we got this gap to fill in from the day. This is the gap right there. We'll see if you actually come down or if the buyers stay up or the buyers step up again to push us higher. So, all right, let's take a look at some stocks here. So Palantir, still consolidating sideways. Up 25.75 is going to be that next support level to watch for Palantir. Next resistance is going to stay put at 27.50. Coinbase, we're just under 247. So 255, 250 is going to be that next resistance level to watch for the company. So this is a new resistance, and it's now starting to trade sideways a little bit, right? Just consolidating. So breaking down below that higher low pattern. If I bring this down slightly here, you can make a case that it's still within the range, considering that this right here was a higher low, this is another higher low, but we're still kind of looking like it broke down below that 250-ish level, below the moving averages. So we'll see if it actually breaks out over 254. If this resistance gets broken again, that's the 50 EMA, then I could see Coinbase back up in the 300, in like the 270s, 280s once again. So that's that. Let's take a look at Neo. We already went over. Coinbase, there's a lot of stocks that we went over. Let's take a look at Nvidia. Nvidia has been defying everything we know about fundamental technicals, right? It's just been one of those stocks that continues to defy us with everything. The RSI, although it is starting to come down a little bit, and the MACD also crossed below the signal line, so I would be cautious with Nvidia here. $209, $210 is going to be the next support. SMH is going to be that semiconductor ETF. This has been on a strong rally here. Just want to see the corrections there, 13%, which is very reasonable, I think, for semiconductors. And yeah, strong 23% jump here since lows from back in May. So very, very strong uptrend, bullish pattern. I think this ETF has like AMD, Nvidia, all those companies. I think majority of it is coming from Nvidia and how much Nvidia has pushed up. So, they're definitely higher highs and higher lows forming for this as well. All right, so the Nasdaq still up, still doing handsomely well. The buyers stepping in, that's good. Got the S&P up, and we got the Dow Jones also up. With let's take a look at big tech. Palantir with a strong move, up over 2%. Look at the buyer momentum here on Palantir stock. Amazon struggling a little bit at the open. This right here, Tesla, still over under 750. 750 is that next level to watch as a resistance. So you'll notice that once we broke down, 750 is that first level of resistance that we're watching for Tesla, right? So right there is going to be that next level to watch. In mode, giving us an alert. Let's take a quick look. getting that bounce off of that 50 EMA. Perfect bounce off. Like, this is the basketball pattern that we're talking about, right? This is the easiest swing trading pattern that you can find in the markets. But yeah, 20 times sales, 45 times earnings. It's kind of hard to find it at reasonable valuations, just considering how much it's gone up. But I don't know. I may start like a very small position in this. You know, the high for all-time highs at 142. We're still down a little bit over 12% from its all-time highs. But that right there, you see that tag of the 50 EMA at 116. That's the support. That's the support. Previously, it's been respected several times, and people are watching this, right? Investors, traders are watching this moving average, and they're like, okay, it's tested that level once, twice, previously in the past, 3 times here. That's an opportunity to kind of get in, right? So let's take a look at FCEL, fuel cell energy. All right, Zoom's giving us an alert. We'll kind of go over that in just a second. Up over 14%. That's very, very strong. Still in this downtrending pattern though. Like, I would, still making lower highs and lower lows here. So it needs to break out over that 50 EMA. 677 is that next target. Previous resistance where we got rejected at, all the way as high as this resistance. Kind of aligned with that 200 SMA at $11 a share. So those are some resistance levels to watch. All right, so let's take a look at, we were gonna watch another stock, forgot, Zoom. So Zoom got us an alert here. Breaking down to the downside. 276 is gonna be that next support level to watch for Zoom. Previous support here. And I think that would be a much, much sweeter deal for the company if it comes down to that support. We perfectly validated that in May. If it comes down, I think I would like to take a swing trade at those levels for a 275-ish level for Zoom. Momentum strong to the downside here for Zoom today. Square's up big time. Let's see. The buyers really stepped in yesterday at the 200 SMA. Perfect validation there. And now it's up over 2.39. So that's awesome. That's great. The 50 EMA is going to be the next level, all the way to 278. That is going to be that next resistance level to watch. What do you think about LMT? I'll go over, Mike, your question in just a second. But Lockheed Martin coming down to that sweet spot of 338. Dividend yield's good, 3%. This could also be one of the stocks that could be like in that value sort of sector. Very, very stable revenues. Lockheed Martin's a great business. 13 times earnings, 1.4 times sales. In 2020 revenue, take a look at this. They actually increased that from 59 billion to 65 billion, right? As defense spending picks up, as they continue to kind of create new F-35s, F-15s, or whatever the fighter jets are called, like one of the best in the world. And that's what I really like about Lockheed Martin. It kind of adds a different type of diversification. It's kind of like in the defense sector. Got contracts with the U.S. government up until like 2060. Like I've taken a look at those public contracts that you can look at on their website. Those are great. I mean, those are like guaranteed revenue way into the future, right? So if it comes down 338, I might just start a position here on Lockheed Martin. I really like the business here for Lockheed. It's a stable business. It's not as volatile, but just think about it where you're buying, right? You're buying at a very undervalued level, stable revenues, stable margins, got significant ties with the U.S. government, and this right here, jump of 19-20% if you're buying at support level, gives us the opportunity to capture that 3% yield. If it comes down, even better, 3.5-4% yield, and 20%, 25% capital appreciation over the long term if it goes back down. And of course, the all-time highs are sitting at roughly at $444 that it hit back in February of 2020 before the pandemic, and it's just been on a strong uptrend. Just recently, it's been trading sideways. So this is the one to watch very, very closely. All right, so Vertex, VRTX pushing up a little bit, so 34 basis points up, 191. Again, support level to watch 185, all the way as well as 164. I will be adding at either of those levels. Did add a little bit at 186, I think, 187, around those levels. If it does come down, I will be adding more. All right, let's take a look at VUG versus VGT. Let's see, what is VGT? So Vanguard Information Technology. That's a great question. I prefer VUG more. Only because of the diversification that it offers. Again, that's a different experiment. So is VUG up today? So there we go. It's up over 37 basis points, right? We bought a little bit yesterday on the sell-off, and right now it's starting to push higher as the markets continue to push higher on this inflation news. So, so we'll see. If it continues to come down. The goal with this experiment for me is to every single week continue to dollar cost average, and I know it sounds pretty crazy, but I want to buy it at the most overvalued time we've ever been in the history of the stock market. That's what I want to buy in this specific experiment. I want to be very clear. It's just this one experiment that I'm doing, is that I want to buy at the most overvalued level possibly that I can, and then consider dollar cost average and see that growth over the next 5 years, 10 years out, because on how much the data points us in the last 70 years. We broke that down in that video. So that's the experiment. That's what I would like to see. And of course, it could drop like 40-50% if the market corrects, if the market basically crashes. But that's the whole experiment, right? That's what it's that's the whole point of what I'm trying to do. So that's that. But I would still consider VUG because it offers some more diversification, low expense ratio, only 4 basis points, a very, very significantly cheaper ETF, and absolutely no fees. Let's talk about Etsy. So back up to $210, $214, $215. So again, the buyer stepped in for Etsy as well. So this, I'm actually going to go ahead and turn this level back into a support for this company. I may consider adding some more Etsy. There's a lot of stocks that I actually have to add to. So I'll definitely I'll keep you guys on. Of course, if you're part of our Discord, I'll keep you guys alerted. Look at this stock. We were just talking about it. DATS. It's up 24% today. Again, next resistance 878. Seems like there's a lot of momentum and a lot of volume for this company right now. 2.2 million shares already traded in the first 12 minutes. That's a lot. Let me see if there's a catalyst for this. Yeah, this is an old catalyst here from this company, but strong move for the upside. All right, so besides the EV play, are you going to make any climate crisis play at all? Haven't really looked into that in a lot of detail. I think in terms of renewable energy, in terms of sort of wind energy, solar, all that stuff, I think Enphase Energy does a good job in terms of solar panels. Tesla with the solar energy as well. And I'm also looking into Nexera Energy, NEE. This is also a really good dividend play. Not like a great, but like 1.8%. We've actually swing traded this stock in the past. I've actually traded this in the past. As it's validated some of those support levels, and now it's just trading at a resistance. So I'm watching this very closely. I think Nexera Energy is like a utility company, stable revenues, decent margins. So that's the company that I'm actually watching very closely. I will be doing like a fundamental analysis on this stock as well. And Palantir is all kind of crisis play in my opinion. That's true. Palantir, with what's going on with the geopolitical risk, I think there's going to be more need for Palantir as a company. Because of the intelligence that they offer, right, with their software. And that's what it's all about, right, with the amount of hackings, in the US has gone through, with the issues over in Afghanistan, everything that's going on from a geopolitical risk standpoint, I think Palantir is going to play a huge role with their software, with the data that they provide. But yeah, overall, the markets are, I'd say, like green-ish. And individual stocks are also green. Palantir is up a good 2%. Fiverr is up a good 1.4%. We're back up to 192. Square is up 1.4%. We're back up to 250. Neo is up over 2%. We already covered. Astrospace, up almost 2%. 940. Mara is up over 2.7%. Clover Health, Plug Power, all pretty much green. Tesla, Amazon, Apple, Microsoft, they are relatively staying higher in the green. So that's good. And the broader markets now it's starting to pull back a little bit, so we'll see where we end up. But all right, guys, so this has actually been a very, very long live stream, about an hour 30 minutes. We broke down the inflation report as well. I'll do like a individual dedicated video on inflation and where we actually are, and what the expectation is going to be moving forward and how it's affecting the markets right now. So I hope you guys enjoyed this live stream. We covered a lot of different things and a lot of different stocks. So make sure that you drop a like if you enjoyed it. Really, really appreciate you guys. Subscribe if you're new to the channel. And also don't forget, if you want to check out the Patreon link down in the description below, you feel free to do that. We've got like limited spots in the early bird. I think like less than 10 spots available, and the investor tier as well. So if you want to join, you're more than welcome to get those real-time updates and alerts. And in October, tutorial will be launched, a complete fundamental and technical analysis. I've been working literally hours every day to create the best tutorial out there for you guys, so you have a lot more understanding and a deeper understanding of the markets as well, and you're able to do that fundamental and technical analysis on your own. So thank you so much for watching. I really appreciate you guys. Hope you guys have a great green day and a green week ahead, and I'll join over to our Discord and answer any questions there. Have a great day. Take care. Stay safe. I'll see you guys in the next live stream.